What's up, everybody? Welcome back to the channel. Thanks for stopping by. Doing my weekend research here, came across an interesting article and it sparked an idea for a video. So I wanted to put this together and share it with you as quickly as I could. So recently, I've talked a lot about financial technology, fintech firms. I've highlighted videos. I've highlighted in videos companies like Credit Karma and Robinhood and Webull to a lesser extent. I hadn't yet mentioned anything about NerdWallet though, and an article came across one of my feeds today. Thought it was interesting, and it reminded me that I hadn't even brought them up to the viewers of the tube. So let me go ahead and bring that over. And interesting article: 4 ways to earn more interest on your money. Most of these I have talked about in recent videos. Nerdwallet.com, you can do a quick Google search on this title. It'll pull the article right up. If I remember, I might even link it in the description box for this video down below. But this is interesting. So, a summary here: 4 ways to earn more interest on your money. Open a high interest savings account, switch to a checking account with high yield, build a CD ladder, join a credit union. So, looking more deeply into these things, they talk about high interest online savings accounts. They may have some special requirements that you've got to qualify for or execute in order to take advantage of these things, but that's out there. So get a note of this. In order to make $50 a year in one of these high interest savings accounts, they give the example of keeping $10,000 in an account that earns 0.5% APY, which equates to $50 a year. And they compare that to the average account in the industry yielding 0.06%. On that same $10,000, you'd earn $10 for tying your money up for a year. Interesting, right? And some of the companies that I've talked about in recent videos are listed here as examples. SoFi and American Express being two. Option number 2, switch to a high yield checking account. Again, likely comes with some hoops, but know that that's out there. Likely to have some minimum balance requirement and things of that nature. NerdWallet, obviously, they keep a list of the best or recommended, or those that are giving them a little bit of a kickback for listing them on the site here. Nothing wrong with that, but just so know that that's out there. Build a CD ladder. This is interesting. Again, I won't read this verbatim, but the idea here is to get into certificates of deposit with your bank and do so in such a way that you are investing in multiple tiers or multiple CD products of different maturity dates. So maybe you go in and you buy a CD that matures in 2 years. In 2 years, you get your money back plus the interest along the way. Once you get that payout, or halfway through the term for that initial CD, maybe you go to your bank and buy another 2-year CD or a 3-year CD, and you can continue that trend for a little while, which puts you in a position of regularly having a CD mature, you gaining the interest along the way, and at the maturity date, you get your capital back. An interesting play. I would suggest, if you're going to look into that, pay close attention to the rates that these things pay, and we'll look closer at that in a little bit here. Fourth option, join a credit union. NerdWallet suggests that credit union savings accounts typically have a higher interest payout or rate than regular banks. Let's explore that theory. So I have gone over to the Navy Federal Credit Union website, and let's look at some of this. So for share accounts, aka savings accounts, your APY is 0.25%. So far, we know that we can do better with SoFi as an example, or American Express. Money market, 0.4, 0.45, 0.45, 0.45. Okay. Better than what? Credit Karma, not as good as American Express or SoFi. Jumbo money market savings, 0.25%, 0.5%. We can do those. We can achieve those APYs elsewhere. Save first account, 0.4%, and you need to tie your money up for anywhere from 3 to 60 months in order to qualify for that. We know we can beat that elsewhere. So let's look at some other products. Let's go over to certificates. And so Navy Federal Credit Union has some certificates of deposit, and let's spend some time looking at this. So a standard certificate of deposit will pay as high, so note the little superscript here, as high. So there are going to be some particulars that you need to meet in order to get that highest rate. If you tie your money up anywhere from 3 months to 7 years, and I'll guarantee you that in order to get the 0.95%, you need to tie your money up for 7 years. Your minimum deposit is $1,000. So $1,000 sitting for 7 years, earning 0.95% is what it is. Easy Start certificate, APY as high as 0.5% if you tie your money up for anywhere from 6 to 24 months, 6 months to 2 years. Minimum entry point is $50. We know that we can achieve this rate with American Express and Robinhood, for that matter, without any term commitment. So keep that in mind. This is the kind of study that you want to be doing when considering making investments like this. A special Easy Start certificate. Now we can get as high as 3% back on our money, 3% APY. Again, note the superscript here. Read the fine print. I'm not going to read it in this video, but always be on the lookout for these things. Term of a year, minimum deposit $50. Save first account, APY as high, superscript, as 0.4%. You got to commit to a term of 3 to 5 years. Minimum deposit $5. So interesting stuff, right? Do credit unions beat traditional accounts? Probably. Do credit unions beat financial tech offerings? Doesn't look like it. Doesn't seem to be the case. And again, I say, be mindful of what's available to you on the blockchain. So in a previous video, I'll try to remember to link it somewhere up here. In a previous video, we talked about how the introduction of the blockchain into your investment strategy could significantly boost your returns. I believe in the video I stated 13.5%. The video was produced at a different time that the images that I captured were captured. And so we crossed a month boundary, and I did notice that the rate of return had been reduced from 13.5% to 9%. But still, even on your best day in the credit union, using this, keeping our example, this video, 9% versus 3% on your best day is a 6% delta in the favor of blockchain-based solutions. So you be the judge. I think that yes, there are safe ways to do better than you're doing with your bank. But again, very important that you take a broad look at what's available to you if you're going to have your money treated the best way possible. This video is at about 11 minutes, a little bit over, so I'm going to wrap it up here. Hope you're doing well. I hope this was useful, educational, thought-provoking. Leave me some comments down below. Let me know what you thought. Be well, stay safe, and you'll see me in the next video.